Okay, let's think about making a restart. And I've been asked during the break to clarify something. In fact, somebody was also asking me about this morning. When I use the word recycling, reclassification from equity, what do I mean? What is this phrase? What is it about? So let me just clarify what we mean by recycling, which is also sometimes referred to as the reclassification from equity. Once upon a time, I have an asset. Now this asset has cost me 100. Sorry, this asset has cost me 60. But it has a carrying value of 100. Because I have revalued it. How much have I revalued it by? 40. So there is a gain in the reserves of 40. So the asset is in the books at 100. Because the gain in the reserves is 40. So we've revalued the asset up. Now we are going to sell the asset for 101. We've definitely made a profit on the disposal. Definitely made a profit on the disposal. In theory, there are two answers as to what the profit is on the disposal, and the profit on the disposal depends upon whether you recycle or not. Now, PPE, ISA 16, prohibits recycling. IAS 16, PPE, prohibits recycling. If you recycle something, you use it more than once. What's the profit on disposal? 1, correct. The profit on disposal is 1. So if we do not recycle, we take the proceeds of 101, we deduct the carrying value of 100, and we say the profit is 1. The balance in OCE is not recycled back to P&L, is not recycled back to P&L, but moved to retained earnings. But moved to retained earnings. So you would debit your other components of equity by 40, and you would credit your retained earnings by 40. Dare I say, that was a side issue in the question of Warburton, with the fair value through OCI investment also not being recycled. There was a movement in the SOSI, in respect of Warburton. Not that it mattered in terms of the cash flow, but if you look at Warburton, remember in Warburton there had been a disposal of a fair value through OCI investment, and you can see here that we're taking 24 out of this reserve, and then we are moving 24 into this reserve because there has been a transfer to retained earnings This was on the disposal. Yeah, this was on the disposal. The profit held in equity on these assets that were sold for 24 being transferred to retained earnings. So this is the transfer taking place. So we have IFRS 9 on fair value through OCI also prohibits recycling. I am looking here at not recycling. But I know of an example where we do recycle. I know of an example where we do recycle. There is another accounting standard which says, please, please recycle. 21, foreign currency. Foreign currency. So, IAS 21, foreign currency, IAS 21, foreign currency, requires recycling. Requires recycling on the disposal of an overseas sub. I'm rushing ahead, I should slow down. This is gentle, this is to be enjoyed. Look. Maybe you've got 100% owned sub. Maybe there is no goodwill because it's all been impaired. And maybe you're selling 100% of the sub. So there's no goodwill to de-recognise, there's no NCI to de-recognise, there's no residual to bring in. Your assets were 60, but have been retranslated to 40. So when you retranslate your assets, the exchange difference goes directly to reserves. We've got a gain of 40 sitting in reserves. So these numbers could apply to an overseas sub. An overseas sub with a carrying value of 100, where there is a gain sitting in equity on the retranslation of those numbers, on the retranslation of 40. If it's a foreign sub and we recycle, what's the profit on disposal? 41, yeah. So you have reused the 40, because the 40 has previously been in other comprehensive income, and now the 40 is reappearing a second time, because it's appearing in P&L. So it has been in our total comprehensive income twice. Once when it was recognised, other comprehensive income, then it is realised and it's been put back in the P&L to make the profit 41. So there's been a recycling. So you have your proceeds, less your carrying value, plus you can recycle, you can reclassify from equity, you can recycle, you can reclassify from equity 40. This would therefore give you a profit of 41. The balance in other components of equity is recycled to P&L to form part of the profit. You debit other components of equity by 40 to clear out the reserve, but you credit P&L by 40. You credit P&L by 40. So the balance in other components of equity is recycled. The balance in other components of equity is recycled to the P&L to form part of the profit. So you would debit other components of equity and you would credit P&L. That's recycling. It's a rules-based approach. It's a rules-based approach. There isn't a principle about when you do or you don't recycle. And that's an unfortunate little issue. Has been tested, has been talked about in the exam. There's a couple of articles on it on the ACCA website that I've also included, I think, in the material. Let me just double check on that. Page 154 of your revision material, page 154 of your revision material talks about recycling. Yeah, so that's a copy of an article that was published on the ACCA website, and that I think, if you read that article, I hope it will further clarify and further give you some confidence about what recycling is about. Thank you for the questions. If you look on page 4, there's an index, you know, and at the back there is some key articles. All right. Now, I cannot guarantee this in any way, shape, or form, but quite often there's a question in the exam which is based upon a recent article that has appeared. Now, sometimes I have an inspiration, sometimes I feel a particular article is due to be examined because of other issues. I don't particularly have that this time, so I find it very difficult to be overly aggressive about, oh, question 4 is going to be on this, question 4 is going to be on this. Framework is always an easy one to fall back on because it's such a big area, and framework is something the examiner keeps on talking about in his examiner's report. So we are going to have a look at a question on the framework. I would like to set for you the idea of doing a little bit of reading on these articles that you've got there. I mean, not now. Those of you who are on Facebook, which I assume is virtually everybody, I think I said to those of you who are here at 9:30 this morning that I posted up a status, a little bit of a blog if you like, summarising some of the problems with IFRS 3, all right? And that, you know, what I'm trying to do there is effectively distill down some of the key arguments that IFRS 3 is not a very good standard, or some of the simple drawbacks of that standard. So please make sure that you just have a look at that blog, or you have a look at that Facebook, yeah, Tom Clendon Lecturer. I'm sure if for whatever reason you are not on Facebook, you have a friend on Facebook that you can then log into and have a look for. But a lot of those ideas that I articulated are also found within that article as well. And so what I've done is I've sort of, what the article does is it's a bit academic, and obviously what I've tried to do is simplify it and make it a little bit more digestible. And between now and the exam, I'll post up other little tidbits other little summaries of stuff. So keep an eye out on Facebook for those things. Scan and go down and have a look at stuff that I've posted in the past as well. So I think it's easy to like my page. I don't think the privacy settings are high. I think you can just go in there. But yeah, add me as a friend, like me, or just visit the page from time to time. I'd like to have a look at a question called Janice. And Janice is quite a nice question, or at least I quite like it. It's dealing with current issues, and it's found on page 147.